So you're still getting all of the gold in our portfolios for more or less, something less than $20 an ounce when the average developer would be trading at 90. So lots of room for our value to run up from here for sure.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And as I am continuing on my gold and silver mining adventures, as you can see, I'm still in my gold tunnel today. Dan Wilton of First Mining Gold. Fortunately, he gave me some instructions since Dan, that's what he does. He's the man who finds the gold. So Dan, it's great to have you here, and thanks for joining me. And how's everything going with you so far today, my friend?
It's all going well, Chris, and thanks very much for having me on the show. Appreciate the opportunity to chat.
Well,
we've been very, very busy as we were talking about before, in terms of how we've done a lot of work in what should have been a quiet time, as we're all kind of stuck in our basement offices here. I'm not quite sitting in a gold tunnel like you. No, we've managed to, I think, make a few moves that have really transformed our company, and really transformed kind of the risk reward profile of First Mining as an investment. So, I mean, you're familiar with the story for a long time. We were basically put together by Keith Neumeyer, who's well known to many of your audience, the CEO of First Majestic, but Keith's our founder. And decided in 2015, 2016, in the real depths of the gold market, that there was, you couldn't explore for gold and find it any cheaper than you could go buy it. A bunch of people had given up after 4 years of bear market. So they put together a mineral bank, essentially, and acquired a bunch of very good gold projects in Canada at rock bottom prices. And since then, we've advanced a number of the projects and really kind of pivoted the strategy around developing our Springpole project, which is a 5 million ounce big open pit gold project. If it were producing today, it would be the third largest gold mine in Canada. One of very few projects in the world capable of producing 400,000 ounces a year, and located in a great jurisdiction in northwestern Ontario, where they've permitted 4 big open pit mines in the last 4 years. So we're moving that forward. We've raised capital both through a silver stream with First Majestic. So they're now our partner, and they'll end up buying half of the silver out of the Springpole project, which is about 24 million ounces that come out of Springpole in the mine plan. But that's provided us with the funding really to see our company and the project all the way through to that 2023 timeframe, and when we expect to get our environmental approvals, and rounding the corner on a pre-feasibility study, which I think is going to demonstrate a really robust project there. So, and with all that, while our share price has run up from the beginning of the year, we're still on a per ounce basis one of the lowest valued gold companies, gold developers in the sector. So you're still getting all of the gold in our portfolios for more or less, something less than $20 an ounce when the average developer would be trading at 90. So lots of room for our value to run up from here for sure.
Yeah, and you can see on the chart here, certainly getting that leverage to the gold price. Dan, if you could give bit of an overview, maybe a breakdown. I know you also have the deal with Treasury Metals, and just explain how those different pieces fit together so people can get a good overview of the different parts of the company.
Yeah, so we started the year this year with all of these projects that we owned 100%. And we were focused on advancing Springpole, but in a rising gold price environment, knew that A, we weren't getting any value for the rest of the portfolio, and B, we weren't moving those projects forward as quickly as they could be moved forward by having them separate and independent with separate management on them. So we did a couple of things. Number one, we found a partner for our Pickle Crow project, which is an Australian company called Ateco Minerals. And a lot of our followers in the US haven't really, followed this all that closely, but Ateco is spending $10 million to earn into 80% of Pickle Crow, and we get a bunch of cash and shares along the way. Well, lo and behold, they've raised $37 million. They've got 2 drill rigs on site and a third one coming. They're going to be through that earn-in, by this time next year. So, and if you look at our 20% project interest, Ateco today has a market cap in excess of 200 million Australian dollars. And so our project interest is worth about 50 million, plus the cash and shares we're going to get is worth about another 20. So that project interest to us, you can point to, shares times share price and project interest is worth about $75 million. So we did something similar with Treasury Metals. We sold them our Goliath or our Goldlund project, which sits right beside their Goliath project, 2 contiguous land packages just off the Trans-Canada Highway outside of Dryden, Ontario. And there's a really logical plan to develop those 2 projects together. Goliath has its federal environmental approvals. Goldlund we delineated a 1.7 million ounce deposit, open pittable, and about 25 kilometers away from where they would be building the Goliath mill. So the game plan is pretty simple. Instead of building 2 mills, you build 1. You make it a little bit bigger. You feed it from 2 mines. It's lower risk. It's more robust. And so anyway, we sold them Goldlund and took back shares and warrants and a royalty and some deferred payments. So we're now the largest shareholder of Treasury Metals. We own about 40% of it. But our intention is we're going to distribute about half of those shares and all of the warrants we received, 11.7 million warrants post-consolidation, directly out to our shareholders about the middle of next year. So if you're a First Mining shareholder at the record date in April or May, you will end up with a distribution and become a Treasury shareholder. And that gets us below kind of a 20% level, which is important to them and important to us. But we're still very active with the company. I'm on the board. We've got 3 of 7 directors on the board, 2 of 4 members of a technical committee, and we're scoping what we think is going to demonstrate itself to be one of the most robust and easy to build development projects in the gold sector. And no one really knows this district. It's like a 3 million ounce resource district today. We think that's going to 5 or 6 when you actually do the proper amount of exploration on it. Lots of gold around there and lots more to find. So we think ultimately this is going to be a project that's really going to surprise people and is still trading at a fraction of what we really think the fundamental value is going to be.
Yeah, and you talked before about how just even, let alone $1,900 gold at $1,500 gold, I mean, the numbers start to look good. I think it's going to be an exciting third quarter for a lot of the companies to see, especially I wonder if Wall Street, has already forgotten that the mines were shut down. They're just, I think they're just going to compare the number to the second quarter. They're going to forget about it because that's how they do it.
Yeah.
And but what happens if the gold price, to whatever degree, I don't want you to get you in trouble here, but should we see people buy gold? Shockingly enough, now that Jerome Powell is talking about new stimulus after the last $3 trillion apparently wasn't enough.
Yep.
Anything you can comment in terms of the leverage for people who do think the gold price is going to be rising over time?
Yeah, listen, I think producers have, good and immediate leverage to that. And you're going to see that in the third quarter. The reality is this gold price has only ticked up from $1,300 a year ago, right? It really started that push in Q3 of last year. So we haven't even seen a full year of production at $1,500 gold, let alone at $2,000 gold. This third quarter is going to be really interesting. And I mean, just watch First Majestic. I watch it because we own some Majestic shares from this Silver Stream deal. And they have a 4-month hold period on them that comes off in early November. But when Majestic reports its third quarters, Keith had held back a bunch of silver for sale. So they're selling a bunch of the silver at 26, 27 bucks. And they've got higher volumes and the mines were all going gangbusters. So I think when people start actually seeing the gold price and silver price translate into cash flow and free cash flow, this is going to be like nothing that this sector has ever seen before. So they'll have direct leverage. Now, some of that's priced in, right? You look at the valuation of large cap gold companies today, they're trading at 1.5 to 2 times their net asset value at a long-term $1,500 gold price. That's basically pricing in near-term share price or near-term gold price appreciation. For the developers, that leverage is even more pronounced. So our Springpole project has at $1,500 gold in our PEA scoped an after-tax net present value of 1.2 billion US, with an increase of 200 million US for every $100 in the gold price. So you take that to 2000, around where we are today, that's another $1 billion. You do that on the the marginal cash flow, you get paybacks that are measured in months, not years. And you have this phenomenal leverage. So you start talking about $3,000-$4,000 gold, and the leverage these developers are going to have is fantastic. Now you get cost creep inflation that comes in, as you saw in the last real gold price run. Like the margins increase, but you end up giving some of that back in a hot market. But there is a real lack of development projects in the world, particularly in good jurisdictions and particularly of size. So when you look at our portfolio, I think we're really, really well positioned to take advantage of that.
Yeah, it sure sounds like it. And I'm going to ask a question. I mean, you've already answered it thoroughly, but I'm going to ask it in a different way because I think it's that worthwhile. What is the best case scenario where everything goes perfectly? What are the risks, and what are you doing to address those?
Yeah, so listen, best case scenario, we move forward 2023. We have our federal and provincial environmental assessment approvals, and we're in a gold price environment that demonstrates that this project is worth billions of dollars. And by then, our share price, if we take the risk out of it, the share price should appreciate to get there. So we're really well situated and well funded right now to move this project through those critical milestones and take the risk out of it. That I think is really important because we weren't there at the beginning of the year. So we've removed that kind of financing concern and overhang of getting to that construction decision. So, you make the decision at that time as to, do you build it? Do you find a partner? All of those things are open to you when you've taken the risk out of the project. You can address that at the maximum value. So what are the risks, particularly at Springpole? We're still in a permitting process. And as we go through that, we think the science says that we've got a great, robust project that we can build without long-term negative impacts in the environment. We're in active consultation with 7 Indigenous communities and the Métis Nation of Ontario around, predominantly the environmental impacts of the project, and ultimately still need to negotiate impact benefits agreements. But I think trying to bring a real partnership perspective to those discussions. And, the commodity price will do what the commodity price is going to do. I just think when you look at how large, buildable, and robust our projects are, I feel pretty comfortable that, the gold price is a lot higher or even quite a bit lower. We still have, we're still trading at a fraction of our fundamental value. And I think that surfaces independent of the gold price, although potentially dramatically augmented by the gold price. So I think of it as a very, disproportionate leverage to the upside for sure.
Which sure is a great position to be in. Dan, how can they find you guys? How can they get more information? How can people get their questions answered?
So always feel free to reach out to us at info@firstmininggold.com. Visit the website, www.firstmininggold.com. Ticker symbol is FF on the TSX and FFMGF OTCQX in the US. And yeah, never hesitate to reach out. You can subscribe to our mailing list and follow all of our news. We've got lots of really important catalysts coming on Springpole through the PFS and permitting process. But on Goldland Goliath, we've got a PEA hopefully coming out early next year. They're starting a big drill program there. We've got our partners at Pickle Crow drilling. So we're going to have lots of news flow coming through because we've now got a bunch of people working these projects, not limited by our own bandwidth. So lots to come.
Well, I appreciate that. And folks, all of that information is right down there in the description field below. So that way you don't have to type it. I mean, and if you want to have your basement look like Chris's basement here, Dan's the man to talk to. So Dan, I appreciate you joining me today, talking about First Mining Gold. Guys, if you didn't see his interview about the Fed and Bernanke jokes, want to catch that too. But again, you can contact him, information in the description below. Dan, thank you so much, and look forward to checking back in following the success of your projects.
Absolutely. Thanks, Chris. We'll look forward to catching up in a few months' time. We'll have more to talk about then.
Sure will. Talk to you soon, bud.
Okay, take care.